More on the other big tech stories that are making some waves right now. Ed Lee is with us, New York Times corporate media reporter, and JOANNE LIPMAN, journalist and a distinguished journalism fellow, very distinguished fellow at the Institute for Advanced Study in Princeton. That's fancy. Really, that is distinguished.
With the whole combo.
Both CNBC contributors, but the Princeton thing is what's impressing me this morning.
No, I think I'm going to give it to Princeton. So we'll.
Okay.
Let's talk about IPO.
Include you.
Let's go to the distinguished fellow first. On IPO lockups, how much does this really matter?
I think the issue here is if the core valuations of the company are correct, it's not going to matter, right? You might take a short-term hit when you start flooding the market with stock. But if your core valuation is correct, it's going to be fine.
But do we think that the core valuations are correct still?
That's the problem, right? Because if you look at so far this year, the VCs have actually done a terrible job of valuing companies. Almost half of all companies that have gone public this year are trading below their offering price. What does that tell you, right? The VCs are valuing these companies at these crazy...
I don't want to play the blame game, but is it the VC's fault? Is it SoftBank's fault, by the way, which pushed up the values of a lot of these things? Or, by the way, we had Larry Fink on earlier this morning. BlackRock, T. Rowe Price, you name it. There are a lot of huge firms that have gotten into these things very late in the game, but in the private space, that have pushed the valuations up.
So there's a lot more money that have been flooding into the market, not just SoftBank, as you pointed out, but BlackRock and others, even like Fidelity, sort of big mutual funds sort of found their way into some of these other things. So I think, you know what, when you have a much smaller constituency of basically evaluators is what we can think of them, the valuation is going to be way off. The whole point of a public marketplace is that you have a lot of people buying into the system and sort of figuring out where it should really be. If it's a handful of investors with a few more tacked on, it's always going to be either inflated or grossly distorted. And that's sort of the tension we're seeing now between the public and private. When these lockups expire, all of a sudden, you have to rethink, like, what is this company really worth? Why are we even thinking about that 3 months or 6 months after the IPO? That's a bad sign.